Secret Ethereum explosion is planned. Hello everyone, we hope you're all healthy and having a wonderful day today. We are Richly. Welcome back to the channel. We're back with yet another exciting video. Major Ethereum upgrade is on the way. Ethereum is secretly preparing for a bull run. Ethereum price explosion is coming in the next few months. Before we get started, subscribe if you haven't already. Otherwise, the Ethereum update will have bugs for you and you will miss out on returns. Don't miss out, stick around until the end of the video to know what is the secret update that is about to explode Ethereum through the roof. Was this all planned from the beginning? Ethereum, the world's second largest blockchain network, is set to undergo a technological change that will drastically alter the way transactions are handled, as well as limit the quantity of the Ether token and substantially increase its price. On August 4th, the planned coding overhaul will go online. Analysts compare the update, known as Ethereum Improvement Proposal 1559, to a Bitcoin halving event in which the quantity of Bitcoin was lowered over time. Each halving aided in propelling Bitcoin's price to new highs. According to a grayscale analysis issued in February this year, while Bitcoin remains the favored store of wealth in the digital environment, Ethereum has emerged as the top financial infrastructure, settling over $12 billion in daily transactions. The present price of Ether, according to Andrew Keys, managing partner at Dharma Capital, has yet to factor in this imminent software upgrade. He predicts that the next software update, together with another upgrade in the first quarter of 2022, could easily quintuple the price of Ether by the end of the year. Ether went up 0.6% to $2,312 on Thursday. EIP 1559 is a software patch that significantly alters the way Ethereum transactions are handled by giving transparent pricing on transaction fees in Ether paid to miners to confirm transactions and burning a tiny number of those tokens. The tokens that have been burnt will be permanently removed from circulation. Miners generally transfer tokens to specialized addresses with unobtainable private keys when tokens are burned. No one can use the tokens unless they have access to a private key, thus removing them from circulation. The currencies that remain in circulation become rarer and more valuable as the quantity of tokens decreases. Currently, anybody attempting to make a transaction on the Ethereum network must pay a gas charge in Ether to miners for their transaction to be processed. However, the actual transaction cost is unknown, and market players claim that there is no way to determine the price ahead of time. According to Matt Hoogan, a chief investment officer of Bitwise Asset Management, this poses two concerns. For starters, it creates significant uncertainty about whether your transaction will be executed promptly, he explained. Second, people overspend because they are unaware of the clearing price and bid excessively to ensure that the transaction is completed. EIP 1559 alters this system by imposing a base charge on miners for each transaction, with a portion of the cost being burnt. If requested, participants can contribute an optional tip with their standard cost to expedite the procedure. Market participants also suggested increasing the amount of area available in each block. Transactions are settled in batches or blocks on blockchains like Ethereum. Only a limited amount of transactions may be stored in each block. EIP 1599 will be deployed on block 12,965,000, which is expected to happen on August 4th, according to Dharma's keys. Blocks are propagated every 17 seconds on Ethereum, and EIP 1599 will be deployed on block 12,965,000, which is expected to happen on August 4th, according to Dharma's keys. There was a bug bounty program that compensated people who discovered bugs. That procedure has already been finished. EIP 1559, according to Bitwise's Hoogan, will lower Ether's total inflation rate from around 4% to 3% per year. According to him, this is roughly half the size of the drop witnessed in Bitcoin halving occurrences. Investors should be able to better appreciate the value of owning Ether as a result of the move. EIP 1559, according to Hoogan, should enhance Ethereum network transactions and Ether usage, which would likely help the market attract a slew of institutional investors. The upper trend line of the descending triangle is tagged by Ethereum's price, but intraday charts show a bearish momentum divergence. Since the July 20th low, Ethereum has seen 9 consecutive up days with a total gain of 33%, the greatest 9-day return since the May peak, and pushing Ethereum to the upper trend line of the descending triangle pattern that has been dictating price movement since the March collapse. Unlike Bitcoin, Ethereum does not appear to be overbought on the daily RSI, suggesting that the rise might continue past the trend line before reversing. On the 6-hour chart, however, there is a negative momentum divergence, providing technical support for consolidation at this time. On the chosen timescale, the momentum divergence also corresponds with a rising wedge pattern. The 2020 rising trend line, the 200-day SMA at $2,132, and the 50-day SMA at $2,140 provide a strong foundation for Ethereum's price. The range is bolstered by the February high of $2,041, providing Ethereum with a haven. Assume Ethereum's price does not fall below its February high. In such a case, a retest of the July low of $1,720 and potentially a breach of the triangle's horizontal support line will be more likely. Until a cluster of highs slightly above $2,900, a continuation of the rally above the upper trend line of the descending triangle should meet little opposition. $10,000 buyers of Ether options for December 2021 paid $734 each, but they are now only worth $85, and the price of Ethereum is down 47% from its all-time high. Ether reached an all-time high of $4,380 on May 12th after a 500% increase this year, which was even more strong than the late 2017 surge. Ether's price rose 390% from $290 in November 2017 to $1,420 in mid-January 2018, thanks to the renowned bull market, or bubble, depending on how you look at it. Perhaps this year's huge rise was a DeFi and NFT bubble that will take another 2 years to burst, but it seems premature to make such a judgment at this time. When examining the breadth of assets under control, however, some experts like Celsius Network CEO Alex Mashinsky claim that Ether's flippening has already occurred. Mashinsky claims that Ether's major use case is yield farming, or the practice of staking or locking up crypto in exchange for incentives, whereas Bitcoin is mostly utilized as a store of wealth. Despite the current price being 47% below its all-time high, Ether investors remain positive due to the prospect of higher scalability. In addition, global auditing powerhouse Ernst & Young launched Nightfall 3, the third version of their zero-knowledge proof Ethereum scaling solution, on July 1st. To increase transaction efficiency and privacy on the Ethereum network, Nightfall 3 employs ZK rollups, a Layer 2 scalability smart contract that combines batched transfers into a single transaction. According to the study, it is expected to result in a 90% increase in gas expenses. The closer an options contract gets to the expiry date, the lower the premium grows, regardless of how optimistic Ether investors are. This impact indicates that the fewer days it takes to reach a goal price, the lower the chances of it happening. The following graph depicts Ether's $10,000 call option for the end of the year, which peaked at 0.177 Ether on May 14th. Because Ether was trading at $4,150 at the time, each option was worth $734. Keep in mind that if Ether trades below $10,000 at 8 a.m. UTC on December 31st, this option will be worthless. Even if the price rises to $9,950, the option buyer would have squandered $734. As a result, for such call option holders to be profitable, they required a 160% upside. The $10,000 Ether option transactions should not be viewed as just speculative bullish wagers, as Cointelegraph has described how experienced traders utilize call options in schemes, including several expiration dates. Selling the $10,000 call option is a good strategy for holders to create some income, plus the initial margin required is about 10%, allowing some leverage. For example, if someone purchased a $6,000 Ether call option contract for December 31st, they might deposit 0.20 Ether and sell one contract to potentially profit from the 0.073 Ether premium. This yields a 36.5% return in 6 months, or an 86% annual percentage yield. However, unless a significant margin amount is paid, a call option seller risks being liquidated if the price of Ether rises. Because the call options premium tends to rise in bullish markets, the same transaction will yield considerably larger rewards. Let us know what you think in the comments. Will Ethereum hit $10,000 per token? What are your predictions about Ethereum's prices by the end of the year 2021? Do you believe this update will make Ethereum explode through the roof?